Why it feels like a hype scam. You're noticing something real. Companies like Nvidia, Microsoft, and OpenAI are heavily associated with AI. Their stock prices have surged massively. Every product suddenly has AI slapped onto it. That does resemble past bubbles, dot-com bubble, late 90s, crypto hype cycles. And yes, some companies exaggerate AI capabilities. Some investors chase trends without understanding them. So part of the market is definitely hype-driven. But AI itself is not fake. Here's the key distinction. Hype, exaggerated expectations. Reality, actual technological progress. AI today can write code, analyze medical images, translate languages in real time, automate complex workflows. These are not theoretical, they're already being used. So what's really going on? It's a mix of 3 layers. 1, real technological shift. AI is genuinely improving productivity and automation. 2, speculation. Investors are betting ahead of proven long-term value. Marketing inflation. Companies overuse AI to attract money and attention. The pattern, this happens every time. Almost every major technology goes through this cycle. 1, breakthrough appears. 2, hype explodes, tree bubble forms. 4, crash or correction. Real value remains and reshapes the world. This happened with the internet, smartphones, cloud computing. AI is likely in stage 2 to 3 right now. The honest conclusion. You're right that there is hype and financial inflation. But it's not just a scam. It's a real technology wrapped in speculative excitement. The danger isn't that AI is fake. The danger is people overestimating how fast and how much it will change things. Final thought. A good way to frame it, AI is real, but the market around it is partly irrational. That's why both things can be true at the same time. It will likely change the world. And a lot of money will be lost along the way.
You're not entirely wrong. There's plenty of hype and speculative froth around AI right now, especially in 2025-2026. Valuations for some AI-related stocks and startups have skyrocketed. Massive capital is pouring into data centers, with projections hitting trillions in spending. And there's a classic irrational exuberance vibe, complete with comparisons to the dot-com bubble or even tulip mania. Many pilots fail. Some reports put it at 95% for certain Gen AI experiments. Enterprise ROI is often modest or hard to measure at the company-wide level, and aggregate productivity stats haven't yet shown a massive AI-driven boom. Critics rightly point out overpromises, energy costs, circular funding deals, where big players invest in each other to buy each other's chips and models, and the risk of a correction if returns don't materialize fast enough. That said, calling the whole thing just hype and a scam to purely inflate stocks oversimplifies it. This isn't vaporware or a pure Ponzi scheme. Here's a more balanced breakdown based on what's actually happening. The hype and bubble risks are real. Stock inflation and spending disconnect. Companies like Nvidia have seen explosive growth, e.g. fiscal 2026 revenue hit $216 billion, up 65% YOY, with data center AI chips dominating at massive gross margins. Its market cap has ballooned into the trillions. Hyperscalers, Microsoft, Google, Meta, etc., are spending hundreds of billions on AI infrastructure. But revenue from end-user AI applications hasn't scaled proportionally yet for many players, leading analysts to debate a potential reckoning in 2026, with possible delays in spending, valuation corrections, or even economic drag if the bubble deflates sharply. Overpromising versus reality. A lot of marketing claims AGI tomorrow or revolutionary transformation overnight. In practice, many organizations see task-level gains, e.g., 14 to 55% faster in specific jobs like coding, customer service, or consulting, but struggle with scaling, integration, costs, and measurable P&L impact. Adoption is high in pilots, charts, experiments, 80 to 90% plus of enterprises using AI in at least one function, but full production deployment and broad economic productivity lifts lag, often cited as a modern solo paradox. You see AI everywhere except in the stats. Some sectors even report temporary productivity dips during adoption. 2026 is a potential pivot year. Experts from Stanford, MIT, Forrester, and others predict a shift from evangelism to evaluation. Hype may cool, with more focus on rigorous utility, ROI scrutiny, agentic AI challenges, and pruning underperforming projects. Public enthusiasm is reportedly lower than during the dot-com era, and some CEOs, arch investors, including Sam Altman, have flagged bubble risks.
But it's not just a scam, There's genuine progress and value. Real capabilities advancing. AI models keep improving on tough benchmarks, e.g., big jumps in multimodal, coding, reasoning tasks. Tools like GitHub Copilot demonstrably speed up developers, up to 55% in studies. Enterprise use is growing in practical areas: customer service automation, code generation, content creation, predictive analytics, and early agentic systems that plan, execute multi-step workflows. McKinsey and Deloitte surveys show rising worker access, up 50% in some reports, and use cases delivering cost-revenue benefits at the project level, even if enterprise-wide EBIT impact is smaller so far. 39% of orgs report any. Economic signals. U.S. productivity growth has been solid recently, e.g., 4.9% in one quarter of 2025, partly tied to tech investment and efficiency tools. Long-term projections, e.g., from Wharton, estimate AI could add 1.5% plus to productivity GDP by 2035, with bigger effects later as adoption matures. It's not nothing. Similar to how the internet or electricity took years to fully show up in stats but ultimately transformed everything. Infrastructure build-out has substance. The chip demand driving NVIDIA and others reflects actual compute needs for training inference. Companies aren't just buying hype, they're racing for competitive edges in a general-purpose technology. History shows tech waves, railroads, electricity, computing often have bubbles and busts, but the underlying tech endures and delivers after the shakeout. Bad AI wrappers and overhyped startups will die. Useful applications and foundational advances won't. Adoption trends. 2026 looks like a hard hat year. More focus on scaling proven use cases, governance, security, and agent orchestration rather than flashy demos. Physical AI robotics and efficient, smaller models are also gaining traction alongside the big ones. In short, yes, speculative excess exists. Stocks can, and probably will, correct in parts of the sector, and not every AI company or claim will survive scrutiny. The scam angle fits the worst grifts and vaporware pitches. But dismissing AI entirely ignores measurable improvements in tools that millions use daily, real R&D momentum, and its potential as a productivity enhancer akin to past general technologies. Bubbles often surround transformative stuff precisely because the upside is huge, but unevenly distributed and slower than promoters claim. The winners will be those who cut through the noise, focus on actual value, not just hype, and build sustainably. If history is a guide, the tech itself isn't going away, the froth will. What specific part feels most scammy to you? Stocks, enterprise promises, or something else?
That is a punchy take. And honestly, looking at the stock market over the last couple of years, it's hard to blame you for feeling that way. We are definitely in a gold rush phase, where companies are slapping .ai on their pitch decks just to watch their valuation jump by 20%. To keep it real, there are two truths existing at the same time here. One, the scam and hype side. You're right that there is a massive amount of vaporware. The wrapper problem. Thousands of startups are just wrappers around models like GPT-4. They don't own the tech, they don't have a unique moat, and they'll likely go bust once the hype dies down. Stock inflation. Big tech companies are under immense pressure to show AI progress to shareholders. This leads to overpromising and demoware, videos of AI doing things that it can't actually do reliably in the real world yet. The bubble. History repeats itself. Just like the dot-com bubble of 2000, we are seeing a picks and shovels boom like NVIDIA. While the internet was real, many of the companies valued at billions back then were indeed scams or jokes. To the utility side, where the scam argument hits a wall is in the actual boring labor. Coding, ask any software engineer. AI isn't replacing them, but it's handling the boilerplate, the repetitive, soul-crushing parts of coding, at a speed no human can match. That's a massive gain in productivity, not just hype. Medicine and science. AI models are currently folding proteins, AlphaFold, and discovering new materials, antibiotics, in months that used to take decades. That has nothing to do with stock prices. It's about physical reality. Automation. For the average person, it's a better search engine or a writing assistant. For a global logistics company, it's the difference between wasting 10% of their fuel and optimizing every route. The verdict? We are likely in a financial bubble built on top of a real technological shift. The stock market is currently pricing AI as if it will solve every problem by next Tuesday. It won't. When the market realizes that, There will be a correction, and a lot of these overhyped companies will vanish. But the tech itself, the ability for machines to process and generate complex information, isn't going anywhere.